I think there may be a bubble in a small part of the stock market, not all of it. If you actually analyze it by segment, by this, that's not true. And I would not be a buyer of treasury. I think treasuries at these rates, I wouldn't touch them with a 10-foot pole.
My son.
Yes?
I'm not touching that with a 60-foot pole. Next caller.
Is this your homework, Larry?
Ask him about the car, man.
Is this yours, Larry? Is this your homework, Larry?
Is that your car out front?
Is this your homework, Larry?
We know it's his fucking homework. Where's the fucking money, you little brat?
What's going on, everybody? Welcome back to the channel. My name is Johnny, and in today's video we are going to do a little Bitcoin technical analysis, a little Ethereum, and we will also explore the inverse correlation between the dollar and the Bitcoin price. But before we do, if you guys could please go ahead and like and subscribe. I definitely appreciate the love, and don't forget to ding that bell to stay up to date on all of the latest and the greatest. Starting with the Bitcoin 4-hour chart, this is where we are at right here. You can see price action right now is retesting this former support, now confirmed resistance. What we were in, a lot of people were saying we are in a symmetrical triangle with a potential bullish bias, and I did have this idea as well. We did win a very small trade in hopes of moving to further to the upside and possibly seeing a blow off top, but that is not what we actually got here out of the Bitcoin price. What I see to be the most likely scenario here was this descending triangle, which actually is a part of a much bigger bearish pattern. So it looks like we are in a diamond top. We did break this diamond top of this descending triangle to the downside, which could take us all the way down to the 13-week EMA or the monthly pivot at $16,037.47. Now we do have the 21 weekly EMA all the way down here at $13,823, which would bring us again close to this legacy trend line that has been in play since 2012. Now we are kind of bearish on the Bitcoin price right now. We are getting this bearish confirmation or this bearish retest here of this lower trend line of this descending triangle, which also happens to line up with the R3 yearly pivot. So, this is a very strong area of resistance, and moving back across this might be tough for the bulls to pull off. So we're getting this bearish retest here, so we are expecting further move to the downside. Our first bounce I'm expecting is somewhere around the $17,331 area. If we break that, we should move further to the downside, possibly stopping at this monthly pivot at 16,000, or if we break that, we can head down to the 13 weekly EMA, and worst or best case scenario, depending on how you look at it, all the way down to the 21 weekly EMA. So these are the possibilities. We could always come back up and get back into this pattern and continue this bullish move to the upside, but I do think that Bitcoin needs to cool off. Let's go ahead and actually take a look. So this is the DXY. Sorry about that there. Come on, open. There it is. Back to the chart. So if we take a look at the DXY has been just crashing over the past few months, but we did happen to get a bounce here. So we just broke across this 4-to-1 GAN, which was former support, now turned resistance, after breaking out of this 8-to-1 GAN, meaning we are definitely headed further to the downside. But we do, I would like to see the price of the dollar, or not the price, but the index come back up and really retest this 8-to-1 to confirm further bearish movement to the downside, which would be a pretty significant move. So if the DXY continues to come up, we're going to get about a 2.2% move to the upside. And if you've watched my previous videos, we do talk about the inverse correlation with Bitcoin price and the dollar, and every 1% move to the upside, we see about a 10 to 15% move to the downside out of Bitcoin. So 2.2, we could see a 22% correction from where the Bitcoin price is right now. And that lines us up basically really close to this R2 yearly pivot all the way down at $14,601. If for some reason the DXY gets a stronger push to the upside, we could, what is this one right here? we could see further continuation to the downside out of Bitcoin. But what I'm seeing is this is just, these are just more bearish confirmations of further movement to the downside. If we do get rejected right here at this 4-to-1 GAN, that's less than a 0.5% move. So we shouldn't see, if this happens, we wouldn't expect to see further movement to the downside out of Bitcoin, but we should expect further movement to the downside out of the dollar. Now, the dollar has been playing a pretty significant role in the movement of the Bitcoin price. And we've been seeing this. Now, I took this chart, and on the 15-minute, we can go ahead and compare some of these pivots that we see in the Bitcoin price. So right now, it looks like on the 15-hour or 15-minute chart, Bitcoin is in a descending broadening wedge pattern here, which is a bullish reversal. So we could see a bounce out of Bitcoin in the very near future. But don't forget about this R3 that we are now trading below. So if we go ahead and take a vertical line on these pivots for where Bitcoin, stops moving up and starts moving down, we can see that, when Bitcoin moves down, the dollar moves up. Here, except for here, we see the dollar again moves down, so does Bitcoin. Here at this pivot, it's very small, it's hard to see, but we do get the dollar move up and Bitcoin move down. Here, you see the dollar move down and you see Bitcoin move up. But if you zoom out, you can really see the relationship between these two assets, and really that there is some correlation there. Now, what is the exact correlation? Why are we seeing this out of Bitcoin and the dollar? That's really something that I can't answer at the moment. But, there's a lot of speculation right now that the dollar's reign as the global reserve currency is currently under threat. Now, this article published in Mint back in July, actually late July, early September, goes into a little bit of a discussion, but basically, the Fed has printed, this is as of July 31st, 3 trillion and added that to the balance sheet since February, which is not good. It's inflating the supply of the dollar. However, the velocity of the dollar, meaning how much it's being spent or transacted or changing hands, is very low because the ones that got all of the stimulus have not been spending it. So we're not really seeing the hyperinflation that we have expected with this hyper printing of the Federal Reserves all across the world. We're really seeing a bit of deflation, which at some point will flip to inflation. But this article goes into saying, while it seems hard to imagine the dollar losing its place as the world's global reserve, a glance at history tells us it's far from impossible. Basically, the Dutch guilder filled the role between the 17th and 18th century before the Spanish dollar took over, followed by the pound sterling from 1860 to at least 1914. In each case, the nation's domination of global trade and finance was key to the currency's status through the central banks and regulatory maneuvers that played a role. This goes in to say that every single global reserve currency averages about 100-year reign, actually 94-year reign, and the US dollar is currently coming up on its 100-year reign as the global reserve currency. So if history is going to tell us anything, it says that the dollar is nearing its end as the global reserve currency. Looking at this article from CoinDesk back in mid-September, talking about central banks printing $1.4 billion an hour, which is absolutely incredible. We see this Fed Reserve balance sheet just going absolutely bonkers. And then you have Goldman Sachs in this article published on Bitcoin.com back in late July, talking about, their lack of trust in the dollar as a trusted store of value. Basically, it said the bank says that they have real concerns around the longevity of the US dollar as reserve currency has started to emerge. So, you have China trying to get the digital yuan as being the globally accepted currency for trade. There's a lot going on behind the scenes that a lot of us don't know, but we are seeing something with a correlation between the DXY and the Bitcoin price. This article published yesterday on Financial Times is really pretty interesting. Again, as I mentioned earlier, previous global reserve currencies had an average of about 94 years in their status as global reserve currencies, but all of them at some point or another failed. They ended up giving up their reign to another currency, which then took the spot as the dominant global reserve. So I really see the dollar, in its last few years, possibly less of being the accepted global reserve currency. Now, if we take a look at the traditional markets, this is the S&P 500. Now, on the S&P 500 on the daily or weekly chart, you can see obviously we moved into new all-time highs. We've broken across this support here. We are holding at the 236 extension from the March crash, but as you can see, we have some pretty significant bearish divergence that really hasn't played out just yet. And if this bearish divergence does play out, we could see a 26% correction out of the S&P 500. Now, if we get this big of a correction out of the S&P 500, we will see a bounce out of the dollar, as it will again be in high demand. So we could see the dollar get a nice bounce. We could come all the way back up to the 93% area. Again, that gives us about a 2.2% move to the upside, taking Bitcoin down anywhere from 20 to 30% with it. So if we look at the Bitcoin chart and we're looking at a 20 to 30% move, that puts us right in line basically with the 21 weekly EMA before finally getting a bounce. So, if it's not on your radar, it should be. A stock market crash is coming, guys. It's definitely coming. These prices are artificially inflated. The stock market and the S&P 500 is not at new all-time highs because it's performing well. It's at new all-time highs because it's artificially inflated by our central bank, purchasing all of these stocks. Buying up all these assets, artificially pumping the price. And as the dollar continues to lose value, as the DXY falls, you're going to see things become more expensive. And we're seeing it first here in S&P 500 and other traditional markets. Now, traditional market fear and greed index, again, this is also at a high. We're at 82, extreme greed. This lets us know that a correction or a move to the downside is in fact imminent, and you see the same thing on the crypto fear and greed index. So we are looking at a crash, and if we go back to March, in the last crash that we saw out of Bitcoin when the stay-at-home order was announced, you see this huge dump off back here, and then we had a nice rally to the upside, and if the same thing happens again, I really see the Bitcoin price coming down and taking a tumble, but moving beyond the 21 weekly EMA, I really do not see that happening. So right now, the biggest play is waiting for the price to come down to the 21 weekly EMA, because it could be the best last entry position that we could ever see for Bitcoin as we move into 2021. But right now I'm just waiting. I'm not in a trade. I'm waiting to see what happens. I've got my eye on some altcoins right now. We should get some sideways trading with Bitcoin, and we should see some more movement to the downside, but we will get bounces along the way. So, if you're interested in playing some scalp trades, keeping an eye on your exponential moving averages per time frames, and buying the dips and selling the bounces, the bearish retests to the downside. But right now, I'm not in a Bitcoin trade. I'm actually being patient. I'm waiting for some definitive price action to let me know if there is actually a trade that is worth taking the risk to get into. Okay, moving on to Ethereum. Ethereum is actually looking a bit more bullish than Bitcoin. You can see this here. So I have these two charts next to each other here. One is the Bitcoin USD Ethereum USD ratio. The other is the Ethereum Bitcoin USD ratio. These two charts actually basically just tell me what asset is better to be holding at the moment, because we are going to see Ethereum gain some ground on Bitcoin. And right now it's looking like Bitcoin is going to lose some of that ground on Ethereum. So Ethereum should be looking at a move to the upside in the near future. What I'm looking for here is a possible rejection of this upper trend line of this falling wedge, moving down to my first entry here at 492.14. But we are patiently waiting to see if we do get a break across this upper trend line, because our point of control is right up here. So a movement to the upside there is not out of the question. If we take a look at the RSI, so we have a lower high here out of Ethereum, but we do have a higher high on the RSI, which it's not confirmed yet, but this could be a bearish divergence, meaning we could be moving further to the downside. On the regular MACD, again, we do have a bit of bearish divergence on the histogram, but if we look at the volume weighted MACD, you know, we got the bullish cross here, that nice movement to the upside, but it does appear to be rolling over, and it does look like we are going to continue this movement to the downside. Now, if the price action is able to stay in this pattern, and we get this buy order fill right here, we are looking for a nice move to the upside. Again, as Bitcoin continues to trade sideways or move to the downside, we should see Ethereum gaining some ground on Bitcoin. Let's go ahead and look at... So we looked at the DXY, we're expecting a bounce there, which should translate to a movement to the downside out of Bitcoin. If we take a peek at the total crypto market cap, same thing going on here. We have this diamond top structure or descending triangle. Descending triangle would be the second structure of the bearish diamond top, which is defined as two structures, a broadening structure that usually leads into some sort of a triangle. And it has a bearish bias if it is a top pattern, and that is exactly what we have. So if we take the measured move here of this bearish diamond top, so you go from high to low here at this sell-off point, and we move that to the point of breakout. So a little bit of the conservative estimate, some move it actually to the point of breakout here. Either way, we're looking at a 21% correction out of the total crypto market cap, and you know, it'll be healthy. We're definitely looking at that, because if we get these corrections, smaller corrections along the way, on our moon mission right now, then you know, these corrections will hurt a little bit less each time that we move to the upside. Looking at USDT market cap dominance, we have a nice double bottom. This is looking like it's going to take off, meaning some people are looking to take profits in their crypto holdings and move that into USDT until they get re-entry positions that are acceptable to their trading plan. Looks like Ethereum dominance, it broke out of this falling wedge. It did get a spike up, came down, retested, confirmed the bullish breakout. We're waiting to see what happens here, but it does look like it's forming some sort of a falling broadening wedge and might continue to move further to the upside. If we take a look at Bitcoin market cap dominance, a few different scenarios are playing out here. So we are, again, this is the daily chart, we are again in this falling broadening wedge, which is a bullish reversal pattern. And it looks like we came up and we tested this upper trend line here. Let's go ahead and just remove all of this. And we did come up and we did test this upper trend line here, but we didn't break through it. We actually came back down into the pattern, and it looks as if dominance is retesting the upper trend line of this falling broadening wedge once again. So I don't see it breaking it right now, to be honest, unless something extravagant happens, because again, you know, the DXY is looking semi-bullish. But, you know, that doesn't necessarily mean that Bitcoin has to be bearish. Another thing, too, that we're looking at here, which definitely is in the realm of possibility, is this bullish inverse head and shoulder idea. So that would be a shoulder, that would be a head, and then depending on how far we come down, you know, which could be right around here, which would line up perfectly. This would be an inverse head and shoulders, which could mean that we might get a move to the upside out of Bitcoin dominance. However, if this does happen, you're going to want to keep your eye on your altcoin positions, because we could see those take a significant hit over the next couple of days to weeks. But in the event that we continue this movement to the downside, we're looking at Bitcoin dominance coming down, possibly again retesting this lower trend line of this falling broadening wedge, but at some point it is going to break out again to the upside. But if it doesn't, we could be in store for a nice profitable altcoin season. All right, guys, well, that's it. That's all I have for you today. I hope you got some value out of today's video. If you did, please go ahead and like and subscribe, and I will see you all tomorrow.